When you're preparing to buy a home, there's a good chance your main focus is on securing enough money for the down payment. It's important to remember, however, that you'll also have to pay closing costs on the date the transaction closes. While these costs are generally less than your down payment, they can add up to thousands of dollars. Let's take a closer look at what some of them are. Have you ever wondered about exactly what are closing costs when it comes to a home purchase? You pay closing costs when the transaction of a home purchase closes. Most of these costs cover the underwriting process that takes place when your lender creates the loan, but certain fees apply to all transactions, even cash deals. These expenses can involve everything from title search fees, escrow fees, to appraisal costs and more. The specific amount you pay depends on where you live and the type of loan you're applying for. Closing costs can be anywhere from a few $1,000s up to 6% of the total loan amount, which means that a mortgage of $300,000 may come with closing costs that range up to $18,000. Here are the primary expenses you might expect to pay as a buyer. An application fee that lenders charge to process the application. An appraisal fee that's paid to the appraiser for evaluating the market value of the property. A closing fee, small fee that's paid to your closing company. A deposit for lender's escrow account. These can be up to 2 months of insurance payments and property taxes. Homeowner's insurance. You have to provide evidence that you've paid your homeowner's policy throughout the year. Title insurance. This protects a buyer and a lender if a lien or ownership dispute is eventually discovered after the initial title search. An origination fee covers all administrative costs for processing your mortgage. Private mortgage insurance, or PMI. This is only necessary if your payment is less than 20%. A recording fee. That's a small fee the county or city charges to create public land records. Title and escrow fees. That's the cost charged to review previous property ownership records. And an underwriting fee. A lender fee to cover the process of verifying a homebuyer's income, financial information, credit, and employment. Depending on if you're selling, buying, or refinancing, and your negotiating power, it might be possible for you to negotiate some of these costs. If you're a buyer, you may be able to have the seller help you. Of course, that depends on the market. You may be able to negotiate with the lender by comparing fees before applying or scheduling the closing date. If you're a seller, many escrow and title companies offer discounts to earn your business. Closing costs are part of every home sale. While these costs can be high, your lender should give you an estimate of your closing cost along with your projected monthly payments shortly after you apply for the loan. If you have any questions regarding closing costs or anything real estate related, please feel free to reach out to me.